Hi guys and welcome back to the Mindful Investing channel. Today I want to tell you why I prefer Naspers to Prosus as a way to invest into Tencent. First of all, for all of you that don't know Naspers or Prosus, let me explain them to you. Naspers was once the biggest publishing company in South Africa, which over time developed in something like a venture capital firm. In 2001, Naspers acquired 46.5% of the Chinese internet company Tencent for $32 million. Over time, their initial investment of $32 million developed into more than $200 billion. Because of their Tencent stake, Naspers was basically by far the biggest company at the Johannesburg Stock Exchange. Because of Naspers being a huge fish in an otherwise basically small pond, they always traded at a big discount to their net asset value. To get rid of this big discount, Naspers in 2019 spun off most of their assets containing the big Tencent stake into a new company called Prosus, which is listed in the Netherlands. Currently, Naspers still owns 41.6% of Prosus, which owns 28.9% of Tencent. According to Prosus, their net asset value as of September 2021 sits at $219 billion. Of those $219 billion, their Tencent stake accounts for $164.3 billion. To understand why I prefer Naspers to Prosus as a way to invest into Tencent, let's have a look at Prosus' current discount to net asset value. When we divide Prosus' net asset value of $219 billion by their shares outstanding, which currently sit at around 1.4 billion shares outstanding, we get to a net asset value per Prosus share of around $153. Prosus currently trades at around $83 per share, so the current discount to net asset value is around 45%. Let's continue by looking at Naspers. First, we have to calculate Naspers' net asset value. Naspers currently owns around 41.6% of Prosus. This equates to a net asset value of 91 billion. They also have other investments which they value at around 700 million. Their total net asset value therefore is around $91 billion. When we divide Naspers' net asset value of around 91 billion by their 280 million shares outstanding, we get to a net asset value per Naspers share of $421. Compared to the current stock price of around $160, this equates to a discount to net asset value of 61%. Even if we factor in potential tax implications, because basically their whole Tencent share consists of unrealized capital gains, we get to a net asset value per share after tax of around $327. This equates to a discount to net asset value after tax of around 51%. As you can see, Naspers trades at an even bigger discount to net asset value than Prosus. That's why I prefer Naspers over Prosus. Finally, let's have a look at my bull, bear and base cases for Naspers. In my base case, I estimate that Prosus' net asset value, excluding their Tencent stake, grows at around 8% for the next 3 years. I also estimate that their Tencent stake gains around 70%, so basically recovers some of their losses over the last months. Based on these assumptions, Prosus' total net asset value in 2024 sits around $348 billion. Therefore, Naspers' total net asset value sits at $145 billion. I assume that Naspers' discount to net asset value decreases to their net asset value after tax. Based on those assumptions, Naspers offers a potential upside of 223% over the next 3 years. This equates to an internal rate of return of 47.9% per year. In my bull case, I assumed that Prosus' net asset value, excluding their Tencent stake, grows at 15% per year over the next 3 years. I also assumed that Tencent makes up for its losses over the last couple of months and grows at 15% per year on top. In total, Tencent would return 152% in those 3 years. Prosus' total net asset value in 2024 would therefore sit at around $497 billion. Naspers' net asset value would therefore sit at around $207 billion. I again assumed that Naspers' discount to net asset value decreases to their net asset value after tax, which results in a potential upside of 361% over those 3 years, which equates to an internal rate of return of 66.4% per year. Finally, let's have a look at my Naspers bear case, which is basically the most important and interesting case of those three, because I always try to find investments with limited downside but huge upside. In my bear case, I assumed that Prosus' net asset value, excluding their Tencent stake, grows at 8% per year. I also assumed that China introduces some kind of regulatory restrictions that lead to the Tencent stake becoming completely worthless. Based on those assumptions, Prosus' total net asset value in 2024 would equate to $68 billion. Naspers' net asset value would therefore sit at $29 billion in 2024. When we divide Naspers' total net asset value in 2024, so the 29 billion, by Naspers' shares outstanding of around 280 million, we get to net asset value per Naspers share of around $135. Based on those assumptions, Naspers' downside would be around 16%. The downside after tax would be around 35%. And those 35% are basically the reason why I prefer Naspers to Prosus. Naspers offers huge upside potential with an, even in the worst of worst cases, limited loss. That's it for today's video about Naspers. Please always remember to do your own research, your own due diligence, and to never simply trust a guy on the internet telling you that there might be a potential investment opportunity. Feel free to ask questions in the comments and leave a like if you enjoyed the video. See you next time.